Investing in stocks is a tricky business. It involves a lot of research and thought, as the market landscape is ever-changing. There are a number of strategies for investing in stocks. Some stocks are purchased for the long term, due to their underlying fundamentals with positive future potential. Others are bought solely for their dividend payouts, due to their track record of regularly paying dividends. Some are purchased due to a burgeoning market opportunity. Similarly, one can also buy stocks that have some upcoming catalyst that could shoot their price and value up by multiple folds. These catalysts can include upcoming trial results, an FDA approval, a new product launch, or anything other. In this video, we have compiled a list of the top 5 stocks with a huge upcoming catalyst that could possibly result in a massive share price increase. Coming first is an American multinational biotechnology company, Biogen Inc., which trades under the ticker symbol BIIB. The biotech giant specializes in the discovery, development, and delivery of therapies for neurological diseases throughout the world. The company has a huge upcoming catalyst in the form of a decision on its upcoming Alzheimer's drug. Biogen has partnered with the Japanese pharmaceutical company, Eisai Company Limited, for the development of an Alzheimer's drug called lecanemab. Recent results from the therapy's phase 3 trials showed positive primary and secondary outcomes. Lecanemab reduced the rate of mental decline on a clinical dementia scale by 27% against a placebo. However, the trial was not free of side effects. The Food and Drug Administration will roll out its decision on accelerated approval of the drug by January 6, 2022. The companies also plan to file for approvals in Japan and Europe, and full traditional approval in the US by the end of the first quarter of 2023. If approved, this drug will be a game changer for Alzheimer's patients. This could lead to a massive shoot-up in the share prices of both Biogen and its partner. Moreover, since Biogen's sales haven't been so impressive as of late, this new drug could be just the thing needed to bring its financial growth back on track. In the latest quarter, the company came out with earnings per share of $4.77, on revenue of $2.51 billion. Although both the metrics were well above the estimated, revenue fell by 10% year over year, and profits surged only because of reduced spending. The next stock in line is another American company, but in the cloud computing and virtualization technology space, VMware Incorporated, trading under the ticker symbol VMW. The company specializes in cloud management infrastructure security, networking, and digital workspace provision. It helps customers deploy data mining platforms. The company's latest collaborations and partnerships include Hewlett-Packard Enterprise, Equinix Incorporated, and Wipro Limited. Its upcoming catalyst is the progress and regulatory discussion on its Broadcom deal. Late in May 2022, the tech behemoth Broadcom Incorporated announced its plans to acquire the company for roughly $61 billion. The acquisition is expected to close somewhere in Broadcom's fiscal 2023. After the close of the deal, VMware shareholders can choose to receive $142.50 per share in cash, or 0.2520 shares of Broadcom for each VMware share. However, the deal has garnered much attention from regulators. Tech deals tend to draw intense scrutiny from regulators, in concerns of too much market power in the hands of few, and a strategy to shut down competition. Similarly, in the Broadcom VMware deal, Britain's competition regulators are critically assessing the situation. The Competition and Markets Authority invited comments from interested parties recently. The comments are expected to help with the assessment of whether to formally launch an investigation into the deal or not. If the deal goes through without any troubles, it would likely result in a much better outcome for VMware's shareholders, according to certain analysts. The company has a long journey in continuing its business model transformation. In its latest quarter, earnings of $1.47 per share, on revenues of $3.21 billion were below the expected. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Following suit is a biopharmaceutical company based in the US, Gilead Sciences Incorporated, which is represented by the ticker symbol, GILD. The company is widely famous for its COVID-19 antiviral, Veklury. The biopharma benefited greatly during the pandemic due to sales of Veklury, but the sales are now understandably slowing down. In the third quarter of 2022, total revenue declined by 5% due to lower sales of Veklury, but oncology sales took lead with a 79% increase year-over-year. Total revenue was $7 billion, while oncology revenue came at $578 million. Before it gained a name for the COVID drug, Gilead was a pioneer of HIV drugs. It has strong franchises in HIV therapy and oncology, with its long-lasting injection, lenacapavir, preparing to become the next blockbuster HIV treatment. If approved, it could very well be the first drug that will keep HIV under control, with just one treatment every 6 months. The FDA will issue its decision regarding the approval of the drug in the country by December 27, 2022. There are many positive expectations regarding the decision, following which label expansions could possibly make lenacapavir a go-to drug for most members of the HIV-positive community. This could drive sales past $4 billion annually at its peak. Earlier this year, FDA swatted down the company's first application for the drug, due to problems with its glass vials. But now that the issue has been resolved, things seem on track for a better outcome. Coming next is a semiconductor company also based in the US, Lattice Semiconductor Corporation, trading under the ticker symbol, LSCC. It solves customer problems in numerous markets including communications, computing, industrial, automotive, and consumer markets. The chipmaker is working on exploring many untapped opportunities in the field programmable gate arrays, a niche in the semiconductor market enabling the reconfiguration of hardware. The company's latest FPGA platform, Lattice Avon, gained much traction in its pre-sale stage among the testing audience, and is ready to prove its worth. Management is expecting it to add around $3 billion to Lattice's total addressable market, making it over $6 billion. Additionally, the platform will significantly expand its product portfolio, and also create new greenfield revenue opportunities. It is only a matter of time before the platform shows its potential. Moreover, the company has been working on coming out of a growth rut with supply chain efficiencies, new market entries, and a complete revamping of its roadmap. In the third quarter of 2022, it came out with a revenue of $172.51 million. The revenue surged by 31% year-over-year, also surpassing the quarterly analysts' expectations. Furthermore, net income per share delivered a remarkable increase of 74% on a non-GAAP basis. Quarterly earnings per share were 48 cents against the expected 44 cents. The company expects revenue between $170 million and $180 million for the ongoing quarter. The last stock on our list is a clinical stage biotechnology company, Mirati Therapeutics, which trades under the ticker symbol, MRTX. Based in the US, Mirati is a targeted oncology company focused on the development of cancer therapeutics. The biotech firm is developing a lung cancer candidate, adagrasib. It is an experimental treatment that blocks mutated proteins from instigating normal cells to become cancerous. The US FDA is in the process of reviewing the company's application for adagrasib. The decision is anticipated by December 14, 2022. If approved, the treatment candidate will enter a competition with Amgen's Lumakras, which received approval in 2021. Since lung cancer is one of the deadliest forms of cancer and even all other malignancies, drugs that treat it are the pharmaceutical industry's best sellers. Amgen's drug surged to annualized sales of $308 million in the second quarter of 2022. This gives Mirati's drug a chance to soar even higher as it could be more popular. The reason for this is Mirati's ongoing trial, that is looking for overall survival benefit for lung cancer patients. The final results from the trial are expected in mid-2023. On the other hand, while Amgen's drug does have the ability to shrink tumors or delay disease progression, Amgen hasn't been able to prove survival benefit. Hence, Mirati's candidate then has a better edge over Lumakras, and may prove a better alternative. Additionally, the company had roughly $1.2 billion in cash and equivalents as of September 30, 2022, more than enough to see the drug through its complete development and commercialization. This brings us to the end of today's video. We hope that the insight we aspired to deliver you has been of meaningful value, and would help you upgrade your investment portfolio. We would love to hear your thoughts on our list in the comments section below. If you would like to know about more stocks and different investment strategies for them, check out our website, stockstelegraph.com.